Welcome to The Explainer. We love breaking down the big stories behind the numbers. And today, we're digging into Starbucks' latest quarter. But we're going to look at it through a really specific lens, the CFO's. Why? Well, because she just called this quarter a major turning point. All right, so let's dive right in. This single sentence from CFO Kathy Smith, it pretty much frames everything. After almost 2 full years of struggles, something has finally shifted. So the big question is, what does this turning point actually look like from her perspective? Let's break down the story she laid out. Okay, so to really get a handle on this turning point, we have to start with the big headline numbers. And what's so fascinating here is that they tell this story of, well, total contradiction. It's a real push and pull between some good news and some, let's say, not so good news. So on the one hand, things look pretty good. The top line revenue, it came in at a really strong $9.6 billion for the quarter. That tells you customers are definitely still spending. And that $9.6 billion, that's actually a 5% jump from the same time last year. But here's what's really important. This is the first time they've had positive comparable store sales growth in 7 quarters. That's sales at stores that have been open for at least a year. 7 quarters. The momentum is finally pointing in the right direction again. But here's the other side of that coin. While sales are up, profits took an absolutely massive hit. We're talking earnings per share plunging by 34%. Whoa. And look, this isn't just some random bad number. This is really the cost of that turnaround we just talked about. So you've got to ask, what exactly is driving that cost? And this really lays out the core tension of the entire quarter. Let's break it down. On the good side, you've got that first positive global comp growth in what feels like forever, record revenue overseas, and transaction trends in the US are looking better. But on the bad side, oof. Operating margins got squeezed by 500 basis points. That's a full 5%. And profits, as we saw, fell off a cliff. So the key takeaway here is pretty clear. Growth is back, yes, but it's coming at a pretty steep price thanks to inflation and some big strategic investments. All right, so let's dig a little deeper. Where did that growth actually come from? And what were those headwinds that really squeezed profits? The CFO was super clear about this. First off, the growth story wasn't the same everywhere. The CFO pointed out that the global numbers were really carried by their international business. So while the US is still kind of getting back on its feet, the international segment was absolutely the star of the show this quarter. And this is where it gets really interesting when you break down the numbers. So globally, sales were up 1%. But check out the US. It was totally flat. A 1% price hike was basically canceled out by a 1% drop in the number of transactions. So it was the international business, places like China, Japan, and the UK, that literally carried that global number into the positive. Just look at China. Sales up 2%, and that was powered by a huge 9% jump in transactions. Pretty amazing. So what about that pressure on profits? Well, the CFO pointed to 2 main culprits. First, you've got stubborn inflation hitting everything from coffee prices to tariffs. And second, they're making these huge planned investments in their Back to Starbucks plan. And a lot of that cash is going straight to their employees, to make the whole in-store experience better. So with this constant battle between boosting sales and controlling costs, the CFO laid out some really decisive actions they're taking. The idea here is to build a much healthier foundation for the future. And probably the most dramatic move was a big shakeup of their store portfolio. Get this, in just 1 quarter, they had a net of 107 store closures across the globe. But this isn't about shrinking the company. It's about getting leaner and healthier. Now, these closures weren't just random. There was a really clear logic. First, they looked at every single store and asked, does this meet our new standards for customer experience? Then they applied a super strict profitability filter. So if a store couldn't clear both of those hurdles, it was closed. The CFO expects this will actually help their profit margins a little bit going forward. And it's not just about the stores. The CFO also talked about streamlining things back at corporate. The goals here are super straightforward. Cut overhead, be smarter with their money, find ways to build new stores for less, and ultimately just lower their overall corporate expenses next year. Okay, so they've made all these big, decisive moves. What does the road ahead actually look like now? Let's dive into the CFO's vision for what she calls durable growth. Well, it looks like the plan is already starting to work. Remember, after 6 straight quarters of negative numbers, Q4 finally flipped to positive. And the CFO says that positive momentum they saw in September just kept on rolling right through October. That's a really encouraging start to their new fiscal year.
But, and this is a really big but, she was super careful to manage expectations. She made it very clear that turnarounds are tough to predict and that recoveries aren't always a straight line up. Basically, she's telling everyone, hey, the trend is good, but don't be surprised if there are some bumps in the road.
So what's the ultimate goal here? What's the end game? It's actually not just about getting sales numbers back up. The real goal, from the CFO's point of view, is to build a business where, and this is a direct quote, every transaction is higher quality and more profitable. This is all about creating a model for growth that's sustainable and can last for the long haul.
And that right there brings us to the final critical question. The turnaround is officially underway, right? Sales are finally heading in the right direction. But the real test, the thing that will define this whole new chapter for Starbucks, is whether they can achieve that much deeper goal, making their growth not just bigger, but fundamentally healthier and more profitable, one cup of coffee at a time.